World stocks slip as trade fears set in. A currency trader watches the computer monitors near the screens showing the Korea Composite Stock Price Index, KOSPI, left, and the foreign exchange rate between the U.S. dollar and South Korean won at the foreign exchange dealing room in Seoul, South Korea, Monday, July 30, 2018. Asian markets fell Monday after a steep decline in the U.S. technology sector weighed on Wall Street at the end of the week despite data showing the economy was growing. AP photo, Lee Jin-man, Singapore, AP, world markets slipped on Monday as steep losses by U.S. technology stocks and a weakening Chinese yuan shook confidence in overall growth. Keeping score, Germany's DAX fell 0.3% in early trading to 12,824.32, while France's CAC 40 was down 0.4% at 5,490.90. Britain's FTSE 100 dropped 0.2% to 7,683.99. Futures pointed to small losses on Wall Street, with the contract for Dow futures down 0.1% at 25,400.00 and S. Asia Stay, Japan's Nikkei 225 index dropped 0.7% to 22,544.84 and South Korea's KOSPI edged 0.1% lower to 2,293.51. The Shanghai Composite Index slipped 0.2% to 2,869.05 and Hong Kong's Hang Seng Index lost 0.3% to 28,733.13. Australia's S. Tech stock losses. Technology stocks led a slide in U.S. stocks on Friday, adding to the market's losses from another tech-driven sell-off a day earlier. On Friday, Twitter announced that its monthly users declined in the second quarter, causing its stock to plummet 20.5% to $34.12. It was the company's second biggest loss since going public in 2013. Snap, the company behind the Snapchat messaging app, slid 4% to $12.83. Facebook shares gave up 0.8% to $174.89 a day after the social media giant led a slide in technology stocks that snapped the S. Amazon.com bucked the trend, adding 0.5% to $1,817.27 after the online retailer reported its biggest profit ever as its advertising on cloud computing businesses kept growing. U.S. economic growth. The U.S. economy accelerated last quarter at an annual rate of 4.1%, its best showing since 2014, the Commerce Department said Friday. Consumers spent tax cut money, businesses stepped up investment, and exporters rushed to ship their goods ahead of retaliatory tariffs. President Donald Trump was thrilled with what he called an amazing growth rate and said it wasn't a one-time shot. But most economists disagree and say the pace of growth in the April to June quarter won't last. Friday also marked the end of the busiest stretch of the second quarter earnings season, with roughly a third of companies in the U.S. Most companies delivered better than expected results and favorable outlooks. That has reinforced the underlying perception in the financial markets that the U.S. economy is performing strongly and that the Federal Reserve could raise interest rates this week. Analysts' viewpoint, the Chinese renminbi is weak, reflecting the wider trend despite Trump and European Commission President Jean-Claude Juncker slapping each other on the back and agreeing to hold off on new tariffs, said Vishnu Varathan, head of economics and strategy at Mizuho Bank. Investors are realizing that the main trade risks lie between the U.S. and China, he added. The renminbi, or yuan, has been skidding since February, mostly because of slower economic growth in China and rising interest rates in the U.S. BOJ meeting. Traders are looking out for the Bank of Japan's statement on monetary policy due Tuesday. Financing costs will rise if the bank decides to steepen the yield curve. This is markedly different from yields turning higher on their own. In that case, bonds will drop and investors will be driven toward equities. Energy benchmark U.S. Crude rose 77 cents to $69.46 per barrel in electronic trading on the New York Mercantile Exchange. It lost 92 cents to settle at $68.69 per barrel on Friday. Brent crude, used to price international oils, added 36 cents to $75.12. Currencies: the dollar increased to 111 yen and 8 cents from 111 yen on Friday. The euro rose to $1.1678 from $1.1656. Copyright 2018 The Associated Press. All rights reserved. This material may not be published, broadcast, written or redistributed.